Good afternoon, ladies and gentlemen, and thank you for Taylor for presenting a compelling view about why gold is going to the stars. Now we've had the thesis, this is where you need to get exposure to it. Liberty Gold. We are the premier developer of oxide gold projects in the Great Basin. I thank you for attending this afternoon. I will be making forward-looking statements. These are our cautionary notes. They're available on our website as part of our corporate deck presentation. What is Liberty Gold? Liberty Gold's DNA is in exploration and discovery in the Great Basin. That DNA sort of realized itself in the discovery and ultimate sale of Long Canyon, and in 2016 identified Black Pine, which is our flagship asset in southern Idaho, a previously producing mine that had no activity on it. We picked it up in 16 for $1 million. We've spent something in the order of 35 million drilling it out, and we released a PFS last year that showed a 2.2 million ounces produced out of that future mine for a 17-year mine life with some pretty attractive after-tax economics that you can see there. We've had long-term support from institutions, shareholders, 42% instos. We've got some of the big names in our stock, Van Eck, Merck, Franklin. And a couple of years ago, Wheaton, who sponsored this event today, got into our stock, picking up the half-point royalty on our Black Pine deposit, of which we have a 50% buyback. So that deposit has a quarter-point royalty. That's a pretty unique situation for this size of project in the Great Basin and gives us great opportunity. Last year was a really big year for us. We started the year as a company with just over 3 million ounces in resources. We today sit with 6.5 million ounces in resources, just under 5 in Black Pine, which were released through the pre-feasibility study. I'll talk a little bit about those economics. We doubled the size of the permitted exploration footprint at our Black Pine deposit. We built a mine permitting team. And we finally completed an exit from Turkey, which was a strategy where we were divesting non-core assets to feed exploration and technical activity into the Great Basin. So that's our NAP focus. And just to add a little bit of sugar to the story, we rediscovered some very interesting high-grade antimony mineralization in our Goldstrike deposit in southern Utah, which I think could be an interesting story. It's emerging, and we'll see where that takes us. 25 is going to be a similarly big year for us. We've got technical works leading to the start of feasibility on Black Pine. We've got permitting. We have already kicked off US permitting. We're going to take that through its process. And as I mentioned, we'll figure out what high-grade antimony in Goldstrike means for us going forward. This is the team that's doing the work. The CEO, Cal Everett, is here in the audience. He is a legend in the mining finance game. Late last year, we added Matt Zietlow to the team. He is a recognized NEPA permitting specialist in the US, and he's driving our fast-track permitting of Black Pine through that US federal process. Some detail on Black Pine. As I said, our flagship deposit. This is what's really driving the company. This is an open-pit, run-of-mine heap leach operation, previously mined in the 90s by Pegasus. Reclaimed, shut down, and now picked up by us. We have very strong local support. We've spent the last 8 years working on this, de-risking the project. We have all our power to the front gate available to be pulled off the power line right now. We have a water supply 100% sorted from existing wells in the basin. We have a very low environmental impact. It's a previously disturbed site. We don't have any surface waters. This is dry, arid southern Idaho. So no trees, no streams, no salmon, no lakes. We have no water in the mine environment, so no pit lakes. We have a very benign environmental opportunity here, which we think will allow us to get through permitting. This really is a snapshot of where we're at. Just under 5 million ounces in resource, published in the pre-feasibility study, 3.1 in reserves, of which 2.2 is actually recoverable. All of that is underpinned by just under 2 million ounces of high-grade zones within the carbonate sequence that we're mining at a gram above a 0.5 cutoff. So that high grade, those high grade lenses stacked in the sequence are really driving the economics of this deposit. Snapshot of the pre-feasibility study. As I said, 2.2 million ounces mined over 17 years. First 5 years, 183,000 ounces a year at 1208 all-in sustaining cost. That's a pretty competitive number for this project. As I said, it's a run-of-mine heap leach, lowest cost operating from a both mining point of view and processing point of view. So we're about $9 a ton produced or processed in operating cost, cash operating cost. That's pretty competitive in the business. $327 to build it, payback at $2,000 gold, just over 3 years. That halves if you go to anything close to spot, 2,600. And you can see $500 million NPV at $2,000 gold, 1.2 at 2,600. That's about just under 1.5 at current spot numbers. Huge leverage to gold price to the upside. This is the mine production schedule. You could see those early years, maximum production year, 231,000 ounces. And you could see the blue profile is cash cost profile. We've got a bit of a gap in the back end of the mine life. We need another 500,000 ounces. We've already identified where that is. And the feasibility drilling that we'll be doing this year will identify that, put those into the resource before we start fees in the latter part of the year. Upside for feasibility, the pre-feas was based on 50,000 tons a day onto the heap. We think we've got an opportunity to take that to 65. That will just juice that metal production. And we think with additional resource, we'll keep that life or even extend it. So this is a project that pre-feas is a conservative view, and we think uniquely in the business, we're going to get a feasibility study that's actually better than a pre-feas. Imagine that. Where are we with permitting? Top stream is the US federal permitting process called NEPA. That's the National Environmental Policy Act. It's a very prescriptive methodology to permit a federal action. We are in the left-hand side on the black box. We've just submitted a draft of the mine plan of operations. That is effectively a reformatted pre-feasibility study. That's with the agencies right now. That goes through a completeness review, and we end up with a notice of intent, which is a federal registration of the project. We expect that latter part of this year. We're then mandated in less than 24 months from notice of intent to the right-hand side, which is a decision notice. That's a draft decision, project approval, which means that we expect to have that late 27. Construction decision at the end of 27. Construction starts Q1 28. First metal Q4 28. We can do this. We can permit it, build it, and operate it inside the cycle of the soon-to-be administration starting tomorrow, which I think is very beneficial. The parallel engineering program is at the bottom. So we've got a year of feasibility drilling, a feasibility resource model in Q3, enter fees engineering Q4, exit fees engineering with a bankable feasibility document latter part of 26. At that point, we have the ability to finance the project. That gives us really good opportunity to go to the market, order long lead items, and then make a final build decision end of 27, very early 28. This is very doable. This is a credible, doable time frame to get this project built. What does 25 look like in a little bit of detail? We'll be drilling the resource in that pink central area, and the latter part of the year we'll take exploration drills and we'll start drilling those blue squares. Those are the peripheral targets that we permitted late last year. We think we've got some significant upside potential in this gold system. We're currently at 5. We can see our way through to 6 and beyond as a system. These things have life. The Marigold mine, for example, which is a great analog, started in 1989 with a 9-year mine life. Today it's got a 9-year mine life and it's kept operating. This is this style of project. So that's Black Pine, a minute on Goldstrike. This is a 1.5 million ounce deposit that's sitting in, oxide deposit that's sitting in southern Utah. The eastern margin, we found some high-grade antimony. You can see these orange zones are a jasperoid sitting on the contact between volcanics and sediments. We went into the field. We've got 5% antimony in hand specimen in the jasperoid breccia. We're going back into the field this year. We've got no drilling on this. We can see significant upside. We need to get some more work. We're doing some met work at the moment. And I think ultimately this year will tell us how big this is, what does it mean, and where do we take it. So in summary, big year for Black Pine. We're taking it into feasibility. We're going to see a new resource. We're going to start that engineering. The permitting, we will get to a point where we have certainty of 24 months to an outcome, and we will see what happens with our antimony opportunity. Thank you very much indeed. That's Liberty Gold, premier oxide opportunity in the Great Basin. Thank you.